Chapter 8-5A, we're going to be calculating Social Security and Medicare taxes. On front of you, you have the Excel spreadsheet that shows in the first column our cumulative pay before current weekly payroll. That's the amount that this employee has made up to, so year to date, up until today's paycheck. The current gross pay represents the amount of today's paycheck, and then so those two added together give us our year-to-date earnings. So this is where the first column comes from, is adding column 1 and column 2, and we get our year-to-date earnings. Then we're going to have to take into account our Social Security maximum, because remember that each individual employee no longer has to pay Social Security tax once they earn $110,100. So any amount over $110,100 is not subject to Social Security tax. So we have to go back and calculate how much of the paycheck is subject to Social Security taxes. So for example, in our first scenario, he has only earned $23,700. So he's not anywhere near the Social Security maximum, so there's no overage. So his whole paycheck is subject to Social Security taxes. So then we're going to calculate the actual taxes. So everything in this column, you have your amount subject to Social Security tax times our 6.2% gives us our 105.4. And you can see the formula here. It's taking this cell times 0.062 to get the 105.40. Then the Medicare is 1.45%. So it's taking this cell of 1700 times 0.0145 and getting our Medicare tax. So we'll do the same thing with our second one. We added these two together to give his year-to-date earnings. He has not made over the Social Security maximum, so all of his $4,200 are subject to Social Security tax. So we take the $4,200 times 0.062 to get the Social Security tax to be withheld, and we take the $4,200, and you'll notice this is using E10. I didn't mention that earlier, but Medicare taxes are always based on your current gross pay. There's no maximum amount. So it's $4,200 times the 0.0145 gives us the $60.90. Now our next one, if we add these two together, he is over. He has made $111,425. So we're going to figure out how much he went over. So the $111,425 minus our maximum, he has gone over by $1,325. But that's not how much is subject to taxes. That's the amount that is not subject to taxes. So we need to figure out how much is. So his paycheck is $3,925. So what we're going to do is we're going to take that cell, that $3,925, minus the amount that he went over, and that tells us that even though he's getting paid today $3,925, he only has to pay Social Security tax on $2,600 of it, because that's the amount that puts him up to the Social Security maximum. So then we'll take the $2,600 times the 0.062, and then on Medicare, this is where that becomes important, that we're going back and taking the $3,925 times the 1.45% to get the Medicare tax. So same thing with our next guy. He's made $114,100, so he went over by $4,000. Okay, and in this one it's easier to see. Before today's paycheck, he made $109,500. The maximum is $110,000, so he only needs $600 more to get him to that maximum. So that is another way to calculate the $600, or you take his paycheck minus the amount overage to give him the $600. Then we take the $600 times the 6.2%, and then for Medicare tax, it's the full $4,600 times the rate.